And the Finance Ministry has issued a series of notifications that would bring into effect the new taxation regime for tobacco products from the 1st of February 2026. First of all, it notified that the Central Excise Amendment Act 2025 passed in the recently concluded winter session of Parliament would come into force from 1st Feb. Now, this act specifies new rates for excise duty on tobacco products. It also notified that the provisions of the Health Securities and National Security Act 2025, which currently levies a cess on the manufacture of pan masala, will come into force from the 1st of February. In an accompanying FAQ note, the ministry explained that under the Goods and Services Tax regime, the excise duty on cigarettes had so far been rendered a nominal amount of a fraction of a paisa per cigarette stick, and that the GST compensation cess on the rate on tobacco products had not been increased since it was implemented in July 2017. It also said that for India, affordability has either stagnated or increased in the past decade, meaning cigarettes have not become more expensive relative to consumers' purchasing power. This is contrary to global public health guidance, which emphasizes annual increase in specific excise duties to ensure that real cigarette prices rise faster than real incomes. The government on September 22nd last year had removed the incidence of the cess on most items except tobacco items. Now, from the 1st of February 2026, the cess will no longer apply on these items either, effectively ending it. Now, at the same time, the Finance Ministry also notified the new GST rates for tobacco products. BDs have been moved to the 18% category from the now defunct 28% slab, in effect making them cheaper. All other tobacco products have been moved to the higher 40% tax slab. These new rules will be effective from 1st of Feb 2026. Finally, the ministry also introduced a new valuation mechanism for tobacco products such as chewing tobacco, filter khenni, zarda, scented tobacco, gutkha and more, whereby the GST value would be determined based on the retail sale price declared on the package. Now, regarding the Health Securities and National Security Act 2025, the ministry justified the inclusion of the national security aspect by saying that conventional tax revenues cannot always guarantee funding for national security functions, and so a dedicated cess is the need for the purpose.